Welcome back, my awesome people. Today, I am honored to be here with CIO Brad Roth of Thor Financials. Now, if you have not seen Brad everywhere, trust me, he is everywhere. When you turn on MSNBC, CNBC, even CBC, even Canadian channels, you will see Brad somewhere, whether he's talking, whether he's giving you some awesome advice or strategies, because we're going to take a deep dive into not only Thor Financials, but we're going to also look at the global landscape. Right now, the markets are doing pretty well, but a lot of people, a lot of analysts, a lot of strategists are saying we're going for a downturn. So let's see what Brad's thoughts are. And so make sure you stay tuned into the end because we have a really, really cool strategy that Brad is going to be talking about. So Brad, thank you for being here with us today. I know it's a really, really busy time, especially in the markets, especially, now that it's summer. I'm sure you have other fun stuff to do rather than being here with me. But Brad, how are you doing today?
I'm great, Jacob. Thanks for having me. It's fun to be here.
I definitely appreciate it. I've seen you everywhere on all the news channels, economics channels. So being here on my channel today, it is a true honor. So Brad, just to get right into it, before we dive into the ETFs, can you tell us about yourself, provide an overview of Thor Financials and how you got into finance?
Yeah, sure. Well, let's start with how I got into finance. I've actually was one of those kids that was immediately engrossed in the stock market. My dad and I would fall asleep on the couch watching the rerun of Mad Money and Jim Cramer. And, you know, I remember, back then it was dial-up internet, and he'd mention something, and I'd run to the office and look up, what Jim was talking about. And so I was bit by the finance and investing bug pretty early. Um, you know, I grew up in Pennsylvania, still here, born and raised Pittsburgh. Started out my career in outsourced family office. From there, I immediately kind of just became an entrepreneur and started my own investment business. And then gradually that led to working in a hedge fund, which I learned all about systematic investing and computer-based investing. And so we launched Thor Financial Technologies actually as a hedge fund, but realized quickly we wanted to take everything that we've built to a more broader retail audience. So today, Thor Financial Technologies has two parts to his business. It has a model business that we deliver directly to advisors, and advisors deliver to their clients. We're about $1.2 billion in assets on that part of our book. And then, as you mentioned, we have two ETFs. So we launched two ETFs. The first one in 2022. The second one was last year, 2024. And so we're growing that side of the business and expect to continue to grow that side of the business as time goes on, adding new things. And as you know, and we'll probably talk about, there's a ton of innovation in the space, and so there's a lot of cool things we can now do in the ETF space, and so we're keeping a pulse on that.
And that's the best part about ETFs because, just like maybe say 15, 20 years ago, everybody's traditional investment strategy was bonds, treasuries, and a little bit of stocks. But now I think ETFs are definitely making a big splash because you have the crypto ETFs, you have option plays ETFs, you have covered call ETFs. So I think ETFs are definitely the wave. And I know many of my audience members are definitely dividend investors, ETF investors. Can you tell us about your main strategy? I know you have the two ETFs. You have THLV, the low volatility ETF, and the rotation ETF, but they use a special type of strategy, the systematic ETF strategy. Can you tell us more about that?
Yeah, sure. So let's talk about the underlying strategy, and then we can talk about the ETFs kind of separately. So the underlying strategy really was the brainchild of looking at how markets and people were trading markets from my experience just being in markets for so long, right? So there's people that are fundamental investors, there's people that are technical investors, and then there was this rise of quant. And when I use the term quant, what I'm referring to there is people using mathematics and statistics to try and solve the market or figure out where the market's going. And as computers got better, that space became more difficult. And so what we did is we built a system using engineering and physics to kind of react to the changes in market cycles rather than trying to predict them using mathematics. Because for us, markets are dynamic. mathematics is linear and we want to use a dynamic science like engineering. So what we do is we apply that to every single asset class inside of the portfolio and basically tells us whether we want to be long that asset class or invested in that asset class, or if we don't want to be invested in that asset class. So bringing it back to our ETFs, I think very simply, THIR, as you said, is an index rotation ETF. Very simply, it owns the S&P 500, the NASDAQ 100, and the Dow Industrial Average, 33% each of those three. Everybody owns them. Everybody sees them on, as you said, CNBC or every single day, right? And so we want to be long markets. We like being long markets. We think time in the market is very important. However, as you know, as we saw earlier this year, as we saw in 2020, as we saw in 2018, as we saw in 2008, there's volatility. And if we can use our system to help make some decisions around whether or not we want to be long asset classes or whether we want to be a little bit more conservative during periods of volatility. And that's what our system does. So if you look during this most recent period of volatility here in the US, where markets drew down rather quickly and ugly. And if you look at THR's performance, you'll see it kind of flatline for a couple of weeks. And that was when we were sitting in short duration treasuries waiting for volatility to kind of calm down. And the performance of that fund has been very, very good. We like volatility. So that's THIR. THLV, it's the same thing, except instead of using the S&P, the Dow, and the Qs, we're going to do it by sectors. So we look at each sector equally weighted. Do we want to be long things like technicals, real estate, consumer staples, or do we not, right? And those things will kind of rotate around depending on what our system says, if we should be invested in them or not. And that's how we end up deriving at our portfolio on a daily basis.
Well, that's a very good way of putting it because especially definitely now in this volatile market, everybody's trying to mitigate their risks, try to find places where they can park their money, where even if it doesn't grow, at least they're not going at a loss. And these ETFs are perfect for this environment. Now, if we're going to stay on just the systematic ETF strategy, AI, of course, a lot of ETF firms, you know, hedge fund managers are using AI to help them with either stock picking or building portfolios. What do you think about that? Do you think that is a good way of kind of calculating the future, especially with AI, you know, changing every day? Or do you think the human connection is still the better choice?
Look, I think, Jacob, there's no way to stop AI changing the way investment decisions are being made. I think that is definitely the next wave as people get more comfortable relying on AI to make decisions. Right now, a lot of managers are using AI, but also, as you noted, they have that human touch as this check and balance. And we even put our own guardrails on it a little bit. But there is no stopping. I am heavily invested. I have another company that I work for. I'm invested in. It's called UX Wealth Partners, and our main mission is to bring AI-driven strategies to end clients in a seamless way. And so I think that AI is there's no stopping it. I think if I'm looking at trends in the future and how wealth management is going to be done, I think you're going to have a lot smaller teams that are heavily reliant on AI to help them with investment ideas or to manage risk. But I still think as we sit here today, there's still some hesitation to go full AI, and you still have that partnership between human and computer with some of these new AI systems and investment strategies that are coming to market.
I definitely agree with you. There's no stopping AI. I mean, I think we're all going, 100 miles per hour on this sector. But it's just where does the safety and security come in with AI, right? Like because I've heard a lot of people say that eventually AI will be able to crack the blockchain. So I know that's going to be the biggest catastrophe if it ever happens. But we'll talk more about crypto in a second. But you also host a podcast called The Big Ticker, which is also on Spotify, Apple Podcasts, and I've seen a few episodes. We've interviewed similar people like Adam Patty, Mike Lucas, which I've interviewed both. Great conversations, just like the one I'm having now. But what was your motivation and inspiration to start a podcast? Even though you're, portfolio manager, CIO, you're doing a whole bunch of stuff. When do you have the time to, just kind of kick back and provide the people with some knowledge?
So the podcast, it's actually a really funny story. I had no intentions of getting into the podcast business or doing a show or being on, YouTube or all of these things. But it was a frustration of mine as I started to do some PR and some traditional news outlets that the story of what we were trying to build and the strategy that we were trying to get in front of people wasn't able to be told, right? I'd go on to and I'd have 5 minutes to talk about, I don't know, maybe interest rates, but I would never be able to say who I am and what our strategy is and why people should use it. So we launched the podcast. We're 90 episodes in, I believe, on Behind the Ticker. And we interview portfolio managers that have ETFs of their own, and they get 30, 35 minutes with me, and we just talk shop. How does it work? Why did you build it? Who's it for? Why do you think it's the best thing and that everybody should have in their portfolio? And it's been a wonderful experience. I've met a ton of really great people, as you mentioned a couple of them already. And no, it's been really enlightening, and I'm excited to keep doing it. And I don't know. I don't know how many episodes you've done or how many shows you've done, but I don't know if I'm going to try to do something special for episode 100. That feels like a big milestone for me.
I think episode 100, you should just have everybody have a panel style. Everyone just, talks their opinions. But sorry, I was calling it the big tickers, behind the ticker. My
Yeah.
apologies. But audience, I will have all the details and links in the description box, so you can definitely check it out. It's not a visual because it's more of audio. But I think I love it because, I was listening to it while I was driving. Easy to digest, great people on the panel. So thank you for creating that podcast. And so now that we're looking at, I would say, the global landscape, things all over the world are happening, especially with Iran, the oil sector. We have, of course, the military defense sector is through the roof. What do you see for the end of 2025, early 2026 when it comes to global issues, any recessions coming up? Because it seems like we're being propped up by printed money instead of having a recession that we kind of should have right now. What do you think?
Jacob, that has been probably the assessment for the last decade of being propped up by fake money to avoid a real recession that probably should happen and clean some of this stuff out. But look, we had a tough start to the year with tariff turbulence, right? We didn't know what trade policy was going to look like. And I think we saw a very fair reaction to a lot of uncertainty. Markets today, we finished at an all-time high on the S&P 500. I believe we're trading around 6,200 today. And that has everything to do with a number of things. We have some more clarity around trade policy at this point. I think it's very likely our Federal Reserve here in the United States is going to cut rates, and it's going to, again, to that easy money. But what's very concerning to me, Jacob, is I think the underlying consumer is starting to get a little spent. I think for the average person out there, there's a lot of credit card debt. We're starting to see some delinquencies pop up. I could see if you're, again, this is why I build systems so I don't have to make guesses. But I think that the remainder of the year could be quite tough. I think those interest rate cuts are already priced in. I think there's still some of what tariffs could do to the economy to trickle in. We could see potentially inflation tick higher again, but I think we've come a very long way. We're at new all-time highs. I would expect to see another bout of volatility in the third or fourth quarter of this year. Whether it will be as difficult as the first quarter, I don't know. But I think that we're seeing some consumer slowdown. We're seeing some strain there, and I would anticipate, again, if I were to be a betting man, I would think that markets likely could close at levels lower than what we're seeing today.
Yeah, because I definitely agree with you on that because a year ago, 2 years ago, the recession, everybody's talking about it. The market crashed, but as you can see, we're hitting all-time highs. Even AT&T, one of my holdings, is hitting all-time highs, and I'm like, you guys are not even doing anything.
Right.
But I do agree with that, and I'm looking forward to what 2025, especially the next few months, especially now that because as I said, I am based in Canada, and I think recently Canada and America kind of stopped talking trade talks. I don't know. they're having a little marriage spat, but it's just going to be a very, very volatile point. And so just to talk a little bit, let's go back into crypto and AI. So 10 years ago, no institutions wanted to touch crypto. They did not have faith in it. They didn't believe in it. Just last year, 2 years ago, the ETF, the spot Bitcoin ETF came out. Everybody was all into it. What do you think about crypto? And then the second part to the question is, do you think Thor might come out with something crypto ETF related?
Yeah, it's funny. It's a great question. So crypto, as far as the ETFs, they've been a wild success. I mean, the amount of AUM and assets that have hit these crypto products, the Bitcoin ones in particular, has been nothing short of an absolute success. I think a lot of Bitcoin and crypto is that first asset class that the client went to their financial advisor and said, I want to own it. And the financial advisor, unfortunately, had no way to do so, right? They either had to, find a custody partner there's firms out there that will do that, or they said, hey, look, you're going to have to do it on your own. It's not something we can hold. Now, I think the education of the advisor community around crypto over the last probably 3 to 5 years has been exceptional, and advisors are starting to adopt it more and more. You're starting to see, at least from my lens, that 1 to 3 to sometimes even 5% allocation in a Bitcoin ETF in a diversified portfolio. So crypto is not slowing down at all, and the adoption, I think, especially around Bitcoin ETFs and ETF products, is going to continue to increase. Now, you ask about Thor and whether or not we would do something in Bitcoin. It's actually, and that's why I said it's funny. We ran one of the first kind of risk managed Bitcoin strategies. We had a partner, Eaglebrook Advisors, which is a crypto custody partner to Registered Investment Advisors. Successful strategy, but I think we were just early. Do I think we could ever come out with something in an ETF wrapper that does that? Sure. I'm not taking that off the table. Is it on our roadmap as I sit here today? Probably not. We do some advisory around crypto in some of our portfolios. It's not a pure crypto play, but we have a strategy called our dollar alt that holds gold, silver, as well as crypto. And so we do trade it today, but nothing crypto 100% specific. But yeah, I think crypto adoption and the ETF adoption has been just a wild success, and I don't see that train slowing down anytime soon. Especially with Bitcoin here at 107. It's kind of stalled out a little bit, but
Yeah.
it's definitely had a nice little run over the last 24 months or so.
It was that mental barrier for so many months, people thinking, oh, it's not going to hit the 100 again. It's not going to hit 100. But now it's kind of sitting steady at about 105 to 107. But yeah, you're absolutely right. I think the reason a lot of people did jump on the ETF, the crypto ETF bandwagon, was because of how easy it was to buy. Me personally, I'm not like a crypto fanatic. However, I do have a few percentage in my portfolio, but once the ETFs came out, it was just pretty much like buying and selling. You didn't have to worry about wallets or keys or anything like that. And a lot of them actually also provide a monthly distribution. Out here in Canada, we have a really good firm called Purpose Investments, and they had, even before the spot Bitcoin came out, they already had a crypto, an Ethereum, and a Bitcoin ETF that paid about 15 to 20% in dividends. And it was amazing. And then when the American version came out, that's when I think it exploded, because now it gave everybody the chance to get crypto, even your grandma and your neighbor. So I know you're an expert also on AI and machine learning. What is the difference between AI and machine learning, and where do you see machine learning going? Because I know Nvidia right now is hitting trillions of market cap. It's diving into everything. It seems like they're making headway into the next step of the future. But what are your thoughts on that?
Yeah, I mean, machine learning. And I'm seeing it in actually investment strategies that are starting to come up today. I do a lot of due diligence on new managers, and you're starting to see these machine learning pattern recognition, machine learning investment strategies start to pop up. AI. I think when I think of AI, and again, I think of AI like these large language models like ChatGPT, Grok. that's kind of the way when I think about AI, that's and using AI for investments, that's how I would put it in that AI bucket. When I look at machine learning, that's where we're starting to see some really interesting strategies where people are finding pattern recognitions, or they're looking using machine learning to look at historical economic trends and what trend are we in right now, or what phase of a cycle are we in right now, and that those are continually being fine-tuned. Those are only going to get better and better because the more they learn, the smarter they're going to get, right? And so those are going to continue to need to take some time. But AI just it is no slowing down. It is whether or not you almost can't avoid it at this point. And it's funny. I've started. I think like a lot of our generation is, we grew up using Google, and I find myself transitioned over into like using Grok or ChatGPT to do a search query now and get my answers. And so it's kind of taking over completely, and which is why I think you're going to see an acceleration of AI in investments. It's not going to just be used for, hey, can you help me summarize this email, or can you help organize this list, or fix my grammar, right? It's going to have some decision making capabilities in the investment landscape, which it already does, but that's only going to improve over time. And I can see over the next 24 or 36 months, as we kind of look at the ETF landscape and the products available, and we've already seen a rise in actively managed ETFs. I think we're going to see a significant rise in AI driven actively managed ETFs.
I'm looking forward to those days because um, I mean, the way AI is now is kind of like the dot-com internet bubble, right? The internet coming in 1999, 1998. People just thought, oh, we're just going to do emails on this. But as you can see,
Right.
we have, I mean, the next time your internet shuts down, we're all panicking. It's like, what's going on? Who touched the router? So I think that's where AI will become, because I actually stopped using Google for definitions or questions, and I just go straight to ChatGPT. So you're
Yeah.
absolutely right on that. Now let's take it back to Thor. So the two main ETFs, THIR and THLV, who are these ETFs for? Are these for long-term investors, short-term investors? What do you think?
These are for long-term investors for sure. The reason they were developed is, and I've been in the business and have helped advisors for the last 15 years. And the number one issue that advisors have is when things are good, their clients aren't calling, everything's fine, right? As soon as volatility starts to hit, and as soon as CNBC does their markets in turmoil, and as soon as it's on the front of the local news that the market's down, that is when the phone starts ringing, and that's when people start panicking. And the number one detriment to investment success is panic and that emotional, oh, I'm nervous, I'm scared, I'm fearful. I want you to sell everything, because at the end of the day, 90% of investors are more risk adverse than I think that they say they are. They don't want to lose money, number one, right? We all like making money from our investments, but we sure as heck don't want to lose it. The reason these were developed, and the reason why they're out in the market, is because it gives you an unemotional and systematic way of taking that investment decision of getting in or out of the market out of the hands of a human being, which we are way too emotional to be making those decisions. The way to best use our products, in my opinion, is if you have an already diversified portfolio and you're holding large cap equities, which almost everybody holds large cap equities in their portfolio. This is a satellite bolt onto that position. It's going to help hopefully provide a better risk adjusted return over time, because you're going to help dampen some volatility out of the portfolio when there is a drawdown. Um, but that's the whole reason why they were built. This isn't a one stop fix all investment. It's definitely not something you want to be day trading. There's not a whole lot of juice in it, right? But it is something that you want to be holding long term, bolted on against your, maybe your more passive exposures that you have in your portfolio, and it's a perfect addition, I think, to that large cap equity bucket.
So it's pretty much a very, very safe place to park your money, especially in this current time. Low volatility, low risk, but still at the same time staying safe with your assets, because I mean, what was it, a year ago when the markets tanked? Everybody was panicking, and I'm sure those who invested in these ETFs were pretty much safe at that point. And so I'm sure you've met tons and tons of different type of investors, from the amateur all the way up to, billionaire hedge fund managers. But what is one or two pieces of advice that you would give to a new investor, whether they've never done stocks before or maybe just trying to buy their first stock? What can they do to, I guess, maximize their gains?
Yeah, I think, well, the one I just gave you already, which is try not to be emotional about it, right? The most important thing anybody can do, in my opinion, when they're thinking about investing or getting started investing, is put a plan in place, right? If I have, let's say, $500 that I want to get invested, let's divvy it up, let's diversify it, and let's stick to that plan, right? And if you hit certain goals or certain achievements, and you pick a time to kind of in a systemized approach to reallocate that capital. Like I said, number one mistake is that emotion. So first thing, the first advice, I would go in with a plan, and that plan to either stick to it, or if you have an exit plan as well, then make sure you stick to that. I think the other thing too would be, look, I learned by reading everything I could get my hands on. And there's a lot of, I'm not going to be able to name them all by name, but there's a lot of great resources and books out there. And now, I mean, as we were just talking, the rise of the internet, I mean, you could sit on YouTube and get a lot of great investing advice and a lot of information. But I think, get as much information as you can. Go in with a plan and don't get too emotional. And I think I think you have a great time. Also, look, we're active traders a little bit, right? But time in the market, as I said earlier, is very important. I mean, the power of compounding is a very serious natural phenomenon that is what makes people wealthy over time. So stick with your investments and yeah, don't get emotional.
You're absolutely right on that, because the information is out there. Similar to how you started your podcast because you were seeing what the traditional investing advice or channels were doing. I similarly did the same thing. I was watching so much YouTube during the lockdowns during COVID. And I'm like, all these people are so wrong. I can say it better, do it better, and probably give better advice. And and that's literally how this channel came
Yeah.
about. Started off with 50 views, 30 views, and then it slowly climbs. But I think once you see information for what it is, depending on what your end goal is, you have to study. As soon as your neighbor says invest in something, it's already too late. Um,
Yeah.
so Brad, okay, so a little different from other channels. On this channel, whenever I do have a guest, I like to ask three out of the box type of questions. Are you up for it?
Let's do it. Yeah.
All right. If Thor was a person, what kind of personality would it have?
Thor is a person. What kind of personality would it have? Oh, geez. I would say it's a great question because I keep going. It's the name of the company, right? You immediately associate it with the Marvel movies,
Of course,
right?
that's
And
what I
Thor
was
with his big
thinking. I
and
was
his
hoping
big
to see a
hammer.
hammer behind you or something.
Yeah. So like, we're just not that cool as he is. But let's go with that. We'll go with Thor from the Marvel movies.
Okay, perfect. So strong warrior, always fighting for the common person. I love it. Okay, second question. What is the most random app that you've downloaded recently, before, just on your device?
Most random app I've ever downloaded before.
Some people
Oh,
say they have a yoga app. Some people say they have like a
I
sing-along
have.
app. So
Yeah, I used to have like one of those mindful apps, but I wouldn't be that's not a random one. I want to give you a good answer here. It's probably I'm gonna go with probably some random, I'm not gonna know the name of it, but some random fitness app that I try to probably track how many calories I was eating in a day or like how many steps I was taking and what my biological age is. Something dumb like that that I got too invested in over a month and then ended up never doing it and deleting it. That's probably my answer.
I think we've all been there with those fitness type of
Yeah.
apps. And the last question, if you were not in finance, investments at all, what unrelated career would you be in?
I got the helmet right here. I would love to be a pilot. I would have been a fighter pilot if I had the well, I did have the opportunity. I chose finance. I love finance, but I would have been a fighter pilot. I think it's the coolest thing in the world. Every time I see those planes, I can't take my eyes off of them. I think the guys and gals that fly them are awesome. No fear, a ton of courage, and it looks like a heck of a lot of fun. So fighter pilot would be my answer.
I think that is actually so cool. I'm afraid of heights, but every time I see a fighter pilot or the Blue Wings or any just type of plane show, I'm always so fascinated. For Thor, where do you see Thor in the next 3 to 5 years? I know things are gonna still be crazy around the world, domestic or global. Are there any new products coming in the pipeline? Where do you see Thor in the next 3 to 5 years?
Yeah, I think Thor, we're going to continue to innovate around delivering really cool and compelling and useful models to our advisor base, right? Our main clients are financial advisors in the United States who are looking for differentiated models to deliver to their clients. And we continue to innovate and have, maybe one or two new strategies every year that we can deliver to them. And we listen to them, what their needs are, what they want. And as you and I kind of spoke earlier, the massive amount of innovation in the ETF space, especially with some of these defined outcome ETFs, with some of these, risk-based ETFs, with options ETFs, with yield-based ETFs, you can start to build some really cool portfolios. And so we're going to continue to do that. That would be number one. Number two, I think you'll probably see more from us on the ETF issuance side. We will probably be issuing more ETFs. I don't think that's a 2025, but it could be a 2026 thing. So that would be the two main things you should be seeing from us as time goes on over the next 12 months or so.
That is awesome. And, as you said, right, the ETF space, it could be so creative, imaginative, as long as you can wrap something around a quality asset. Because I mean, especially with taxes, I mean, everybody needs that ETF so they can put in their TFSAs or their Roth IRAs. Okay, that's perfect. So Brad, before we end this interview, are there any last mentions, anything you want to shout out to the digital world? All your details, all your descriptions will be in the description box, but is there anything that you want to shout out there?
No, I mean, Jacob, this has been super fun. I love that you had me on your show. I think your background's super cool. I like that painting you've got back there. A little jealous of it. It's kind of neat. But no, look, all my details, as you said, will be beneath here. Our website is thorfunds.com. You can go in there and check out the ETFs. If you want to learn about an ETF, and it's very likely that I've probably interviewed their manager, so check out Behind the Ticker on Spotify or Apple or wherever you get your podcast. It's available, and hopefully you can get some good information from that. But again, Jacob, this was super fun. I appreciate you having me.
I definitely appreciate you being here with me today. I know you're 10 million times busier than I am. You've given us some amazing wisdom and knowledge, not only in the ETF space, but also in the AI machine learning, and even just this really cool strategy that you're using with mathematics. Because, most ETFs or people that I've interviewed about ETFs, it's always, covered calls or options or something of that nature. But I think this is a really, really cool strategy. And I think my viewers will definitely take a solid lesson from this. And remember, my audience members, this is not the only time you'll see Brad on this channel. We definitely want to keep up with the journey. We definitely want to see what Thor is going to come out with. And anytime, I come up with someone new, you're definitely going to hear it from me. So again, Brad, thank you so much for being here with me today. And my audience members, remember, like and subscribe. And until next time, stay ranting.